Alright, y'all, what's going on? Uh, Cyree here. You already know. This is the market. This is what happened today. We're looking at ES on the 15 minute. The price action was pretty bad today. Um, yeah, ain't nothing really happened for real, for real. I was getting chopped up all around here. As you can see, I'll show you why. I'll show you exactly what when I break it down. But the setup I was going for, like, I posted on my Twitter. Links in the description. Um, yeah, I was looking for price to come down here. Uh, Go to the hour real quick. This was the setup that I was looking for. I either wanted to see it come here, and I wanted to get a reaction in this fair value gap to take out all this buy side right here. This is so much buy side. Like whenever the market decides to go up, this is guaranteed. All this is getting smacked. Um, but we didn't get that. During the London session, we kept crashing down, and then we took out this sell side. So since this happened during London session, I saw that we took out this sell side, and we was in this fair value gap. That's why I kept trying to buy, and I was going for I was gonna buy. So I was targeting all these highs up here. But let me show you down. Let me show you go down to the 5 minute so you can look at what happened in a little more detail. But yeah, days like this, you really gotta realize you gotta reckon. This is when you have to recognize market conditions, and you have to realize that, all right, I'm just gonna sit on the sideline and I'm just not gonna trade because like you gotta play defense. Because like when you go in the market and markets like this, market conditions like this, it would just kill you. And these used to really kill me because I would just keep trying and keep trying and keep trying. Now in my trading plan, I try to limit myself to like 2 to 3 trades. I catch myself taking like 4 or 5 trades sometimes, and that's just my fault. That's just something that I further have to work on. But um yeah, that's why you gotta have. That's why you have to have rules, because if you don't have rules and you're trading in this market condition, you'll just keep going and you'll just keep messing yourself up just all day, just getting fucking tortured in this market. Like it's too much. So you gotta have rules. Um, but I'll show you where I executed it and exactly what happened. And also this is where you another thing you have to realize. You have to realize that, for one, once you make your money, just be content with enough, especially in bad market conditions. Now, granted, after my first trade, I didn't know the market was going to be bad like this, and I'm going to show you exactly what my trade was. I believe I took it on the 1 minute. Let's see. There we go. All right, so yeah, so I started looking at the charts around like 7:30 ish. I seen my setup that I wanted to take, which was in this fair value gap. Um, So you can see once it tapped down into here, I executed. I took a long position right here, and I wanted to see this fair value gap get be support. This was a 5 minute fair value gap. I wanted to see this get used as support, which it did, and then I was targeting this high. And once we take out this high, I started taking my position out. And so from here, this is what I was expecting. I wanted to see this high get taken out. I knew it was probably gonna be some retracement. So I was gonna add in this fair value gap, and I was gonna add somewhere like after these lows, if these lows wanted to get taken back and retrace back into this fair value gap. So it came back into this fair value gap. I bought, and then once I seen how strong it went through, and then how strong it went up, that's when I started, like, I kept getting in and out. Like my first like 1 or 2 tries, I kept getting in and out, and that's what was right here. I got in and out twice, and for small, very small losses, and very small losses, and what happened? Yeah, oh, this is when I started taking a step back. 'Cause I'm like, all right, the market is moving weird, so I'm gonna just take a step back and reevaluate. So market was just consolidating for the rest of the session, the morning session. I gave it one more try down here because after we took out liquidity over here, we took out sell side that was recently generated, and so I wanted to give it another shot, but it just kept moving weird. So after this trade, I was like, what time was this? Yeah, this was at 10 o'clock. Yeah, I got done early. 10 o'clock was my last trade of the day, and I was just like, yeah, I was watching the market, but I told myself I wasn't going to trade anymore. I was thinking about coming back for the PM session, but let me show you what happened in the PM session. Am I too? Hold on, wait, my camera just went off. All right, whatever. My camera just went off, but we can switch to the other camera real quick. All right, yeah, my fault. But yeah, I told myself I was gonna come back for the PM session, but after seeing how bad the AM session was, I was gonna be very careful with the PM session, and I ended up not trading the PM session at all, which I'm very glad because it ended up staying like in this consolidation all day. So yeah, this is basically the action and simplified versions. Let me see. So something that I learned today was, well, I'm not gonna say I learned it today, but it's like a main point was the difference between the draw on liquidity and entries. So when I, as a new trader, when I first started, my main goal, I was trying to master my entries. Like I learned every man, like I done mastered every PD array, every entry technique you can think of. Like that's all I was focused on, and but I wasn't like I wasn't my conviction of the draw on liquidity wasn't the best. So when I would be trading, like I would be marking up all my fair value gaps and stuff, and but I wouldn't know the draw on liquidity, so I would have to lose like four trades to get that one winner, and that one winner would wipe out my losses and only either break even or I will only profit a little bit. I was just going on a rabbit. I'm not saying rabbit, a hamster wheel, just going through the same process. And so I started focusing on the draw of liquidity. And once it's clear what the draw on liquidity is, um, your entry techniques don't even have to be that good. Like once you know the draw on liquidity and you have conviction on that, and the market is showing you signs, like everything works out itself. Like I'm telling you, trading becomes so easy once you develop patience, and you just like the market literally tells you what it's about to do before it does it. The only time you don't really know or it doesn't give signs is when manipulation occurs, and that's when rare folder news drops, um or like the market just randomly spikes, that's manipulation. Or like if it just strong moves down just randomly, like or up, that's manipulation. So the market literally tells you what it's about to do, and it shows you, and all you have to really do is just learn what the draw on liquidity is, what's the highest probability of the market going, because the market just wants to clear liquidity. It does not want everybody making money, so it's going where stop losses are at. So like, you know after seeing this strong move, people whoever's in this trade, people's gonna have their stop loss at the recent low, came right back down, smacked them out, and then went up again. So that's really all it be. It's just hunting stop losses. So this is like a seek and destroy market profile. This is when you either scalping internal liquidity, or if that's not your trading model, then you just like, if that's not your trading model, if you don't know how to trade like that, then you're just gonna get fucked in this range. But this is tradable. It's just very lower probability. So if you did want to trade in this range, like me personally, I would lower size. Which is what I do. Well, I can't. It's really hard to do on this account because it's only a 50K top step account. But in these conditions, if you lower risk and play on the defense, and you're just trying to scout just to like squeeze something out because like you're fiend for the market like me, then yeah, you could do that. There's ways. I'll go in depth about it. But it's really just once you spot in liquidity, you're just attacking that liquidity and getting an entry for that, trying to either buy the stops or buy the lows, or you know what I mean. But My fault, my phone keep buzzing. I keep getting distracted. But all right, let's go to the PM session. So yeah, even in the PM session, like you can see 12 o'clock right here. So go to 1 o'clock. This the PM session right here. And it's the same thing. Like this is not markets that you want to trade. Like you don't know the market's not showing you where it wants to go. It's just out randomly strong move up. It don't even give you entries to get in. It's just straight going up and then randomly straight going down and then straight going up and then straight going down, straight going up, straight going down, straight going up. Like this is not. Once you see this happen a couple times, that's when you like, all right, you gotta sit back and be like, all right, it's low probability conditions right now. Let me lower my size. Let me go on the defensive today, and you gotta go about your trading day like that. If you're going full size in this market and you're trying to trade it when the conditions are like this, you're just stupid. Or not to call you stupid. Like you're just unexperienced. Like all this stuff comes with experience, and that's why I love trading so much. Cause like I've been trading for a long time. I've been trading for like 4 years. And I still learn something new every day. And trading is like that's the thing I put my most time into. Like I'm constantly studying every day. I'm back testing every day, and it be days where I feel like like I learned everything. Like I mastered it. Like I got it. And then it'll be days where it'd be like the market just teaching me something new. Like this is just like endless information. Like every little thing that happens in the market is a piece of information or it gives you a sign of what it wants to do next. And it's all rinse and repeat. Like the market does the same thing. It does the same few things repeatedly 24/7. Well, 24/5 for this market specifically. And all you're doing, once you're getting this chart experience just from I'm not telling you to trade real money, but like if you demo trade every day and just learn the PD arrays, learn entry techniques, learn how to spot liquidity, and you just get that experience, the best way to get better at trading is by trading, but not by trading real money. Because once you start trading real money, your emotions start messing you up, and like it's just not a good deal. So like if you open up, you can I'm about to sign out my account, but you can literally really open up a paper trading account. Now, I was playing around with it on some dumb shit last week, trying to I was trying to show somebody something like how easy it is to lose money, but I bring this account up to 250K within like 2 months, 2 3 months, and I don't even be on there a lot. But like you just paper trade an account and you figure out what's your style of trading. Like everybody has a different style of trading at the end of the day. Like me personally, I'm a little more of an aggressive trader, so hence why I get in more often and I'm comfortable taking more trades than other people. Like you have people that trade all day, every day, and probably not making no money on like no money. And then you got people that take maybe one trade or two trades a month if even that, and they're millionaires. Like it's trading is all about your personal, like it's all about your personality. Like, and you're not gonna learn your personality without trading. Like the only way you can learn about your trading style is about simply trading. So you get in this chart experience and you just diving in with fake money to protect yourself, and you're just learning. The you can really do anything with these markets, but um, recognize market conditions before anything. If market conditions looking good and it's a clear draw on liquidity, like super obvious, the super obvious setups be the easiest bread and butter money, low resistance, like everything just go through easily. But like when you start peeping that it's in high resistance market conditions, lower your size, take a step back, and be careful. Just tread lightly, like play on the defense. Like there's no point of trying to force your way in the market when it's moving like this, because you're just gonna hurt yourself. And it's not. I'm telling you, it is not worth the headache and the emotional. Like it's taxing emotionally, like mentally. Like when I used to have like real bad days, dog. I would be flipping. I would be throwing my chair across the room. Like I would dead ass have a whole temper tantrum, just losing my shit for 10, 15 minutes over trading when it all could have been avoided by having better habits and just basically just performing better and learning more. And instead of getting mad, journal your trades and learn. Like when you journal your trades, you should be putting a screenshot of the trade setup. You should journal why I took that trade. What are your thoughts before, during, and after the trade? What are you expecting? And then after the whole trade is done, like just say what could I have done better? What could I have done better today in the market? So every time I'm done, if I have a bad day, even on a good day, every time I'm done in the market, I journal my trade, write everything down, type everything down and whatnot, and then I ask myself, what could I have done better today? So today, what I could have done better was after I took that one trade and I made my money for the day. I made that one trade. It was a small trade, and I made 350 on it. It was like 350 or 400, but I wasn't content with that. I wanted more, so I kept trying to get in the market. I got in the market like 3 or 4 more times and lost all my profits and lost more, um, which made me red for the day. Y'all know we've been keeping track with this. Monday and Tuesday was very good days. Today it just wasn't it, which is fine. But if I would have did that better, I either would have broke even today or I would have been in green. But I kept going and kept going. I kept trying to force myself in the market that I should not have. So it's a mistake. I wrote it down in my journal. And the more you write it down in your journal, just because I write it down in my journal, that don't mean it's an overnight fix. But when I go back and read my journals and I see how often I make the same mistake, it just it heightens my like it tells me like, all right, like you drawn, like you keep doing the same shit, like tighten up. So journaling is super 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 important. Yeah, that's basically it. Like you gotta find your own personality in trading. Not everybody's gonna trade. You might not like the way I trade. I don't really like the way nobody else trades. That's not the way I trade. Like which is and I trade ICT concepts. So like everything work for like different type people. So it's all about you. So learn yourself, find something that works for you, develop that discipline, get that experience in the markets, and then like after some time go by, like a year of just straight practice and studying and studying and studying and learning, then like you can really change your whole life with trading, dog. Like for real. So that's gonna be it for today. Uh yeah, tomorrow's Thursday. I believe we have a red folder news. I'm not sure. I gotta check. I be forgetting, but yeah, that's gonna be it. I'll see y'all tomorrow.